Hi everyone, it's me Arjun Ghosh here again, and today I'm going to teach you what are business documents. Now, business documents are not to be confused with the financial statements of the business. They are documents which help in the production of financial statements. So let's start. There are different types of business documents. They are invoice, debit note, credit note, statement of account, and check. So these are the official business documents. There are 5 of them, as you can see. So these will help in the production of the financial statement. Now I'm going to explain to you each and every one of them in detail. Let's start with the invoice over here. Alright, so in an invoice, I think you know what an invoice is basically. It is just when a business sells good on credit, it will issue an invoice to the purchaser. So when a business sells good on credit, so it occurs when business sells good on credit. It is issued to the just give me a minute over here. Yeah. So as I was saying, it is issued to the purchaser, which is basically the customer. So it is issued to the purchaser or customer. In that invoice, the number of variables which are contained in it. Let me tell you the details of this invoice. The invoice contains the name and address of the supplier, it also contains the name and address of the customer. I'm just going to put some dots over here to identify that they are, I'm not going to write the same thing over here. I'm not going to write the same thing. So, it's the customer. So, name and address of the customer is also written over here. And obviously the date and the detailed quantities of prices and goods. So, basically the detail of the good, which is the name of the good, whatever is sold on credit to the purchaser or the customer, and along with that the quantity, how much is sold, and the price of the good. Alright, so this is what is contained in an invoice. Now let me show you how an invoice looks like. I hope you've copied this down. Take a good look at it. Alright, so let me tell you how invoice looks. I'm going to draw out the invoice for you now. Alright. So an invoice basically looks like this. There is the top heading over here. On the top right corner, the invoice number is written. Invoice number XXX. It's just an example, any invoice number depending on how many sales the business has made. And on the top, the heading invoice is given. Alright, and below that, the name and address of the supplier is written over here. You don't have to make a box over here, but I'm just going to show you like how much space and where exactly the name and address of supplier is written. I'm going to write name and address of supplier. Okay, so this is where you will write the name and address of the supplier. The next thing in an invoice which is written is the name and address of the customer, which is again a line over here, and the name and address of the customer is written on the top, in the middle left corner. So name and address of the customer. It will be written over in this space somewhere. Alright, and exactly in that same row, on the right side, the date on which the goods have been sold is written over here. So the date is somewhere over here in the same row. Alright, so this was the first half of the invoice. Now the main part comes afterwards. Now below that, another line is given to separate it. And now the main thing is that there will be 4 columns. Do not confuse it with double entry, it is a completely different matter. So there are 4 columns. On the last column, it will be written amount. In the second last column, the unit price, which is the price at which each good is sold. So and then the description of the good. And lastly, in the first column, the quantity of the goods sold. Alright, so these are the 4 columns which are there in the invoice. Now, there are only a few things you need to keep in mind. That is, I think you all know what is a trade discount. It is a discount given when a supplier or the business provides discount to the customer. So, I'm going to show you how a trade discount is written in an invoice. So basically, if the quantity of good is given over here, XXX, and the description of the good, which is the name of the good which has been sold, and then the unit price, and after multiplying the unit price with the quantity sold, the amount is written over here. Okay, and now when there is a trade discount, we are going to subtract the trade discount. I'm just going to write TD over here, which is trade discount. And okay, wait, before we write TD, we are going to write minus X% trade discount. You have to also mention the by percentage, how much percentage the trade discount is given. So after you write this TD, you're going to calculate the percentage of trade discount in amount, and that amount you're going to write in the amount column over here. And after you subtract the trade discount from the actual amount, you're going to write the final amount, which is down over here. At final amount at which the good is sold. So this was an invoice. I hope you can remember that. It's a pretty simple format. Okay, so the next thing I'm going to teach you is, okay, before that, an invoice is kept in both the customer and the supplier's records. So that's the last thing I'm going to tell you about invoice. Yeah, anyway, so the next thing I'm going to tell you is the debit note. Let us see what a debit note is. Okay, I think I need more space for the debit note. I'm just going to write it over here. Okay. So what is a debit note? A debit note is basically when the customer has ordered goods, but if there's been an overcharge in an invoice, or there's a shortage of goods, or there are any other faults in the good which the supplier has overlooked, then the customer will issue a debit note to inform the supplier of any of those errors which have occurred in the deliverance of goods. So I'm going to tell you what exactly comes in a debit note. First of all, the customer checks the goods. Right, in steps. Customer checks goods. Then the next thing which occurs is that if the goods are not satisfactory, then the supplier has to be informed, as I said. So there are a number of errors which can occur, as I was saying. So the errors which could occur are shortages, then there are overcharges, and lastly there are faults. Now these are